If you just look at it from the surface level, the Bank of Canada's decision this morning to hold its benchmark rate at 2.75%, the second straight pause after 7 cuts, that might look like a pretty standard move, but there are a few interesting storylines around inflation, jobs, and of course, growing uncertainty around the U.S. trade policy. So I want to take a closer look at all of that in today's video. So to start here, as I say, the bank held its rate at 2.75% this morning. Not a big surprise there. The bank has already cut rates by 2.25% since this point last year, but now they've paused those cuts. I want to look at what goes into those decisions. There is some important information that we should be aware of. First of all, inflation. In Canada, inflation has dropped to 1.7%. So that is technically below the target, but that's not the full story here. When we look at core inflation, so this strips out the volatile items, that is back above the bank's comfort zone. If we look at the CPI median, that came in at 3.2% in April. The CPI trim was at 3.1%. And these are the numbers that are most important because the Bank of Canada uses these measures above the headline CPI numbers because they better reflect the underlying trend of inflation. Also, when we look on top of that, economic growth, that was 2.3% in Q1, largely thanks to exports. The bank is walking a very fine tightrope there. So why would the banks hold rates again this morning? The big factor here is the rising, almost relentless trade uncertainty. Obviously, the U.S. has been very unpredictable with tariffs. We have new steel and aluminum tariffs that just went on effect today. They went from 25% up to 50%, and there's a lot of additional threats that are out there. So when we look at the instability, that is really starting to take its toll on Canadian exporters. It's adding fears that inflation is going to be spiking up again. Now, I do acknowledge this comes even though we did see that dip in the headline inflation last report, but as I say, it's really those core numbers that would influence the bank the most. At the same time, we see unemployment. That's crept up to 6.9% in April. That's the highest we've seen since the COVID era. We need to look all the way back to 2021 to see rates at this level. So the economy isn't exactly firing on all cylinders. And this leaves the bank in a bit of a tricky spot. Look at it from one side. The core inflation says, hold off on more cuts. If we look at it from the other side, so weak domestic data, trade pressures, that could suggest that the economy could use some more support. Now, Governor Tiff Macklem, he has said that rate cuts could still happen, just not right now. So it's more of a cautious or maybe even a defensive move. The bank doesn't want to risk inflation spiking up again if trade costs rise further. There's a real big threat of that. But you've got to wonder whether holding rates is enough to protect the economy if demand keeps slipping. The bank is taking this sort of wait and see approach. It might buy some time, but it could also raise some questions if the job numbers keep sliding in the wrong direction. Now, when we look forward, pretty much everything, it hinges on those U.S. trade stats. If tariffs stay high or worse, if they go up, the bank may have to cut, whether they see inflation concerns or not. But if things stabilize, if inflation, especially that core inflation, does remain sticky, then more holds or actually even possible hikes could be back on the table. Wonder what your take is. Should the bank have cut this morning? Drop your thoughts in the comments. And don't forget to like and subscribe for more economic updates. Now, I do want to move on to the most recent OECD report, and it's showing the Canadian and U.S. economies are slowing down. And of course, right back to Trump's trade wars, that's the big reason why. According to the OECD, Canada's growth is expected to be just 1% this year and up just a tad from that, 1.1% in 2026. U.S. growth is expected to drop to just 1.6% this year. That's down from 2.8% last year. And it's not just a one-time dip. The group is also predicting U.S. growth will slide even further to 1.5% by 2026. And the report says that Trump's trade moves, that has jacked up the average tariff. They're saying from 2.5% to 15.4%. That's the highest since 1938, and that's hurting both consumers and manufacturers. They also comment global growth is cooling off a bit as well. The OECD expects worldwide GDP to slow to 2.9% this year and stay there through 2026. That's a pretty noticeable drop from the 3.3% that we saw back in 2024. So I'm seeing we're at a bit of a tipping point here. We've gone through 5 years, a pretty tough 5 years with COVID, then the invasion, Russia's invasion of Ukraine, but the world economy has still been growing, and that may be coming to a bit of a stop right now. Now, in Canada here, Hudson's Bay Company just sold off its most iconic assets to Canadian Tire. They raked in $30 million for that. So the court did approve a deal that includes the famous multicolored stripes motif, its historic coat of arms, and all of its customer data. And the company says that the cash will help cover its debts as this 355-year-old iconic Canadian retailer wraps up its final chapter. Over the weekend, the company closed all 96 Bay and Saks stores after months of liquidation sales. We saw a lot of Canadians rushing to buy these legacy products like those famous striped blankets and robes. Now, Hudson Bay is also handing over its domain names, personal customer information. And retail analyst David Ian Gray, he says that Canadian Tire is probably eyeing the decades of loyalty program data as the golden prize, as he puts it. The Bay did launch its rewards program back in 2001. It's been tracking the habits of shoppers for more than 20 years. Now, Gray says that's going to be an enormous transactional database. There's lots you can do with that data to monetize it. Most of the 9,000 plus staff have already been let go. Distribution centers will be closing by mid-June. So as of June 1st, 8,300 employees have already been laid off. And once the company's distribution centers close on June the 15th, an additional 899 employees will be let go, according to the report. Now, on a separate note, BC Mall owner Ruby Liu, she's acquired 28 of HBC's retail leases, and she plans to launch what she's calling a new modern department store concept. Now, the experts warn this is not going to be easy. Gray says it's going to be very daunting, and especially to try to activate 28 stores. Now, the last story for today, Loblaw's bread scheme and a $500 million settlement has been approved in Canada's biggest ever price fixing case, including Loblaw and its parent company, George Weston. The Ontario Superior Court, they did sign off on the deal in early May. And if you bought packaged bread between 2001 and 2021, that's a pretty big time frame in there. If you bought any packaged bread from Loblaw's, you're likely eligible for a share of that money. The settlement covers all of the provinces except Quebec for now, and there will be a separate hearing in Quebec that is set for June the 16th. So the class action lawsuit, it accused Loblaw and others, more about that in just a second here, of conspiring to fix bread prices for over a decade. Now, Jay Strosberg, he's a lawyer for the plaintiffs, and he says we're talking about almost everyone in the country who is probably impacted by this conspiracy. Now, Canada Bread, they already pled guilty, was fined $50 million in 2023, but that went straight to the government. That didn't go to the consumers. The claims process hasn't opened yet, but Canadians aren't going to have to dig through a bunch of old receipts. Strosberg did confirm during an interview with Ian Hannamansing that obviously you're not going to need receipts to make a claim. Now, once registration begins, Canadians are going to have to fill out a simple claim form online. I'm going to make it easy for you. I'm going to put the link for that on the screen right here. If you're in Ontario or the rest of Canada, you can visit CanadianBreadSettlement.ca. If you live in Quebec, I will also put a link here that you will have to register in order to complete your claim. Now, there are other grocery stores that are named in the lawsuit as well. Sobeys, Walmart, Metro, they've all denied any wrongdoing, and they are not part of this settlement. As of now, Loblaw is the only major grocer to settle. That's all for today's video. As always, I do say thank you so much for watching, and we'll see you in the next video.